Hello, Asian guy here again. You're watching Financial Updates. Today we're diving into the great silver lie, what they're hiding about the 2026 rally. Here's the shocking truth. Silver has surged faster than almost anything else in modern financial history. Yet most people don't understand why, or how it could still be a trap. Before I explain what really matters for your savings, your paycheck, and your retirement, do me a favor. Smash that subscribe button and click the bell so you never miss a truth the mainstream once buried. Now, let's cut right to it. In late 2025, silver didn't just rise, it exploded. Prices went from around $29 an ounce at the start of the year to above $75, all within a single calendar year. That's a more than 150% rally, unheard of outside of meme stocks or crypto bubbles. And yet, legends and forecasts are rolling out that silver might go even higher by 2026. Analysts, influencers, and even investment authors are whispering about $100, $150, even $200 silver. But here's where it gets weird. Because the mainstream narrative about this rally, the what 99% of investors are hearing, isn't the whole story. It's not just about prices. It's about why the price moved, who benefited, and whether the real truth has been hidden in plain sight while everyday investors are being let in too late. So let me ask you a question right now. Are we looking at a genuine breakout or the biggest commodity misdirection in history? Stick with me, because what comes next will change exactly how you think about precious metals forever. Why everyone's talking about silver. Now, let's step back for a moment and talk about fundamentals. You've probably heard the simple supply shortage or Fed cuts rates, so precious metals go up narrative. Sure, those are part of the story. They aren't the real story. Here's what's actually driving silver. Record industrial demand from technologies like solar panels, EVs, and data centers. Silver isn't just a jewelry metal anymore. It's a critical industrial commodity. Persistent supply deficits that have stretched for years. Mines aren't producing enough to keep up with demand. Central bank diversification and investor fear of inflation. Investors are treating silver like a hedge alongside gold. That's how we ended up with prices we haven't seen in decades. But here's the twist. Prices aren't rising just because silver is suddenly more valuable. They're rising because the story investors are being told has holes big enough to drive a truck through. The hidden narrative. What they're not telling you. Imagine this. You and millions of other investors see silver hitting records. You see forecasts shouting, it's just getting started. And most of the commentary out there, from pundits, YouTubers, retail analysts, focuses on price alone. But here's what they rarely talk about. Much of this rally was momentum-driven, not structural. Yes, fundamentals matter. But when something rallies over 150% in a year, speculation must be a part of it. Veteran traders have publicly warned that silver's wild price moves are typical of speculative cycles, the kind that reverse fast and hard. And here's the kicker. That speculative momentum can make markets look less fragile than they really are. A sharp drop can wipe out years of gains faster than you think. When futures exchanges raise margin requirements, even slightly, traders get squeezed. That's exactly what happened in late 2025. Silver tumbled sharply on a margin hike, showing just how precarious this rally can be. A market that spikes on speculation can just as easily unwind it. Retail investor psychology matters, and it's dangerous. Surveys show a majority of traders believe silver will trade above $100 in 2026, even though that's wildly optimistic relative to most institutional forecasts. But here's the problem. When retail traders chase gains they missed, they often buy at the peak, not the bottom. That's how bubbles blow up. But wait, there is a real silver story, a deeper one. Okay, so maybe I sound skeptical. Good, you should be. But let's separate hype from genuine structural long-term drivers that do matter for your money. Industrial demand isn't imaginary. Silver isn't just an asset, it's a material. It's used everywhere. Electronics, solar panels, EVs, and data centers. That's not speculation, that's real demand. Supply deficits aren't going away overnight. Even if prices fall, the simple truth is, mines can't switch on production like a faucet. Shortages build up over years, and deficits take years to unwind. Macroeconomics is still bullish for hard assets. Weakening real interest rates, geopolitical tension, and inflation fears keep metals in the spotlight. But, and this is important, these factors alone don't guarantee a continued vertical price march. They just set the stage. So what's the great silver lie? Here it is in simple terms. Most analysts and pundits are pitching silver as a runaway rally, unstoppable and straight up. But the real truth is more nuanced. It's not a straight line up, it's a cycle. Momentum can push prices far, but it can also pull them back just as violently. Not all predictions are grounded in fundamentals. Many bullish forecasts rely on extrapolating past gains instead of analyzing real economic drivers. Retail investors are being set up to chase price, not value. FOMO is powerful, and markets love to take advantage of it. So while silver can still go higher, nobody should be acting like this is a guaranteed rocket to $200. That's a story that sells clicks, not one that protects your wealth. So let's go deeper, not the surface stuff you see everywhere. The real forces shaping silver's future. By the end of 2025, silver had gone from roughly $29 per ounce at the start of the year to breaching $75 and higher. A staggering move that few traditional commodities achieve outside of crypto-like hype cycles. But if you follow the headlines on their surface, you'll miss what's happening beneath. Because, yes, silver did rally. But there's a hidden disconnect between what most people are being told and what the data actually shows. Here's why that matters. The narrative. Most people are hearing. Everywhere you look, the commentary goes something like this. Silver is going to $100, then maybe even $200. This rally has just begun. Sounds exciting, right? It sounds powerful. It feels like something big is happening that you don't want to miss. But here's the thing. That narrative assumes one key thing. That the rally is fully grounded in fundamentals and will continue straight up. And that's where the great silver lie starts. Because when you peel back the optimistic projections, one question stands out. Are these forecasts driven by real structural demand or by speculation that's already baked into the price? In reality, both are true at the same time, and that's exactly what makes this situation so dangerous for the average investor. Truth. Silver's price has been driven by real demand. But that's only half the story. Let's be clear. Silver does have real industrial demand. In fact, over half of silver's global use now comes from technology, solar panels, electric vehicles, electronics, and even AI infrastructure. This isn't jewelry anymore. This is industrial metal demand, and it's structural. But here's the catch most people miss. Unlike gold, much of silver production isn't responsive to price increases. Most silver is a byproduct of mining copper, lead, or zinc. That means even if silver prices skyrocket, mines don't suddenly produce more because they're not focused on silver as a primary product. So while demand is genuine, the supply response is very constrained. And when supply can't keep up, prices can get pushed up further. But that also makes the market extremely volatile. That's not just theory. That's exactly the kind of dynamic that leads to major spikes and crashes. A structural story gets wrapped in speculation. Now let's layer in another factor, momentum trading and psychological buying. According to recent market sentiment data, more than half of retail investors now expect silver to trade above $100 an ounce in 2026. That's significant because retail participation typically accelerates after big price moves, not before them. In plain language, people see big gains and then jump in late. That's classic speculative behavior, and it's exactly what bubbles are made of. But here's the twist. There are real fundamentals supporting silver: industrial usage, supply constraints, global metal shortages. Yet those fundamentals alone don't justify the full extent of the price appreciation we've already seen. In other words, the market is mixing real drivers with pure momentum, and that's where the risk explodes. The market has already priced. In a lot of good news. Right now, silver prices are where they are because the market already priced in massive bullish expectations for 2026. That's a big deal, because everyone who's buying today is betting that prices will be higher tomorrow. But what happens if global economic conditions shift? What happens if central banks tighten liquidity? What happens if demand slows unexpectedly? Markets don't move in a straight line, even for strong fundamentals. In fact, one of the best warnings came from a veteran trader who pointed out that rallies like this, especially fueled by momentum, can reverse sharply. That means prices might stay high for structural reasons, but that doesn't automatically mean higher prices every single month. The real game changers, most people aren't talking about. So now let's talk about the hidden shifts that actually could define silver's trajectory in 2026. And this is where it starts to matter for your money. Export policy shifts in China. Starting in January 2026, China is implementing export controls on refined silver, potentially affecting up to 60-70% of global supply. That's not a minor detail. It's a structural shift in how supply flows around the world. And when supply gets choked, prices can spike. But that doesn't always mean investors profit. Why? Because the system becomes volatile, and who controls the supply can influence prices much more than speculators ever could. That's a narrative almost no analyst has elaborated on deeply yet. Volatility can eat. Gains faster than you think. Earlier, in late 2025, exchanges like the Chicago Mercantile Exchange raised margin requirements because of extreme silver price swings. When that happened, futures prices fell sharply in a single session. because it shows how thin and sensitive the silver market has become, even at these elevated price levels. Silver isn't like gold, where markets are deep and liquid. Silver can see double-digit percentage swings in a day. That level of volatility changes how you should think about risk, especially if you're considering buying or holding for 2026. So what's actually happening right now? Let's bring this back to the big picture. Fundamentals matter. Industrial demand and supply constraints give silver a real structural story, but most of the rally is already priced in. A lot of the upside expected for 2026 is already reflected in current prices. Speculative psychology is intertwined with real demand. That means swings can be faster and deeper than most people expect. Structural shifts, like China's export controls, are underreported drivers. These can create supply shock events, not smooth upward trends. Put another way, the market isn't a straight line up. It's a battleground between reality and hype. That's a lie. And here's the part most people miss. You can't build a long-term investment strategy on the assumption that a rally will just continue forever. You have to understand where the forces push against that narrative, not just with it. 2026, a crossroads, not a continuation. Here's the truth. Most forecasts do expect silver to stay elevated in 2026, but the story is far from uniform. Some analysts see prices continuing to rise because of deeper supply tightness and sustained industrial demand, especially in tech sectors like solar and electrification. Others see volatility dominating the market, with rapid swings and possible corrections. Let's unpack that. Bullish case. Structural support is real. On the bullish side, multiple credible forecasts point to continued strength. Analysts argue silver is entering what they call price discovery, meaning the metal has broken long-standing resistance levels and is carving a new higher range. The reasons? Industrial demand isn't going away. Silver's role in solar panels, electric vehicles, and data centers is huge and expected to keep growing. Supply deficits are persistent. For years now, demand has outpaced supply, and production can't easily expand since most silver comes as a byproduct of other metals. Macro tailwinds like inflation concerns and expectations of lower real interest rates push investors toward hard assets. This can sustain higher valuations even if prices aren't skyrocketing every month. In fact, some forecasts show silver potentially moving into the triple digits in 2026, not because of pure hype, but because multiple structural forces are aligning. Sounds great, right? But here's the wrinkle. Bearish signals. Volatility isn't going anywhere. Just as importantly, bearish and cautionary signals are loud and clear heading into 2026. A veteran trading analyst recently warned that silver's dramatic rally has characteristics typical of speculative cycles, meaning prices can retrace sharply once momentum weakens. And that's not the only warning. In late 2025, the Chicago Mercantile Exchange raised margin requirements on silver futures because of extreme volatility, and silver prices dropped sharply in a single session. If futures traders get squeezed like that again, it can trigger rapid sell-offs that wipe out gains in weeks or even days. Let's put that in perspective. A market can rally due to fundamentals, but when traders and algorithms start driving prices more than real demand, the risk of a violent reversal climbs. This volatility factor alone makes silver less like gold, a deep, stable market, and more like a jet ski in choppy water. Easy to ride up, dangerous to hold when the waves turn. Hidden structural risk, China's supply policies. One of the most underreported developments heading into 2026 is China's announcement of export restrictions on silver. China is one of the world's largest silver producers and traders, and restricting exports doesn't just tighten supply globally, it reshapes the flow of metal around the world. Think about that. Instead of silver flowing freely to global markets, China may require strict export licenses. That kind of policy can push more physical silver into domestic use, leaving less available for global industry or investment holdings. And yet, most retail investors haven't even heard this yet. This is not a small sidebar. It's a structural shift that could change how supply is priced in 2026. And markets always react to changed fundamentals, often before the news goes mainstream. Oil and silver, a weird relationship that matters. Here's a subtle but powerful warning sign. At points in 2025, it took less than 1 ounce of silver to buy a barrel of oil, a ratio that historically made no sense. Normally, it's closer to 3-4 ounces per barrel. Why is this important? Because when the price of a commodity loses touch with normal relative value patterns, that's often a sign of temporary distortion, not long-term equilibrium. This discrepancy tells us silver's rally has outpaced its economic logic, at least in relative terms. And distortions like that don't disappear quietly. They correct violently. What this means for your money in 2026. All right, now the part you've been waiting for. Here's how all of this plays out personally. If you're holding silver expecting straight line gains, You may be right, or you may be sitting on a volatile ride that flips direction fast. Forecasts vary widely. Some see sustained upside, others expect a range-bound year with quick pullbacks before any major breakout. If you plan to buy at current levels, you're buying into a market that already priced in a lot of bullish expectations. That means most obvious gains may also be priced in. If the market pauses or reverses, it could cost late buyers dearly. If you're using silver as a hedge or diversification, this is the place where fundamentals really matter. Industrial demand and structural deficits do support a long-term case, but the path will not be smooth. Expect volatility, big swings, and prepare mentally and financially for it. The one strategic mistake almost everyone makes. Here's the part almost no commentator on YouTube or finance media will tell you, but seasoned traders and institutional players know this instinctively. The biggest mistake is assuming uptrend equals certainty. People hear bullish on silver and think it must go up in a straight line. Markets don't work that way. In 2026, the market narrative could shift in three big ways. Fundamental story continues. Prices rise with structural support. Speculative momentum fades. Prices grind sideways or pull back. A macro shock, policy change, rate moves, geopolitical event, flips sentiment suddenly. Any of these outcomes is possible, and that's exactly why risk management matters more than the price target. Silver has real drivers supporting it: demand, deficit, industrial use, and many analysts see price rising further. But the market is not a guaranteed rocket ride to 100 plus. It's more like a roller coaster that's only just left the station. Thrilling, unpredictable, and unforgiving if you're not prepared. So here's the real takeaway. Understand the difference between structural fundamentals and speculative momentum, because that difference will decide whether you gain big or get caught holding a collapsing move. If you found this helpful and want to stay sharp on market truth, not hype, make sure you like, subscribe, and turn on notifications so you catch every update about silver, gold, and markets that actually matters for your wallet. Thanks for watching Financial Updates. I'll see you in the next deep dive.